Hi everyone, my name is Jonas Velasco with Compass Real Estate here in New Jersey, and I'm here with Frank. He's with PRMG. And Frank, tell us about you and how long you've been in the business.
Yeah, absolutely. Yeah, so I'm with PRMG, I'm a mortgage lender with Paramount Residential Mortgage Group. Our company is in 49 or 50 states, all but New York. This is a little bit more of a family business for me, and I have 30 years of experience behind me to be able to bounce ideas, questions, resources off of. So I thank you for having me.
We have a really good topic today. We're going to be talking about DSCR loans and what it is and who can benefit for it.
A DSCR loan is a debt service coverage ratio loan. It's what it stands for. It works in 3 tiers: Tier 1, Tier 2, and Tier 3. We can get into some of that stuff later, but essentially where this differentiates from other types of loans is we do not use or qualify a borrower based off of their personal income from their job, from their own business, things like that. This is solely based off of the property in question being able to cash flow with rental income. So it is using rental income as a basis for the ability to cover a mortgage payment.
How does DSCR loans differentiate or differ from a traditional?
Well, going back to that more typical conventional financing, if you will, a DSCR loan is an investor-only loan. You cannot be a first-time home buyer. There are different down payment ratios for somebody who is we'll call it a repeat investor, if you will. So a first-time investor has typically a higher down payment than somebody who is a repeat investor. And a repeat investor is somebody who has had ownership interest in an investment property, second home, something like that, something that is not used as their primary residence within the last 12 months. So that's the biggest thing there. And then again, touching on that differentiation between conventional financing, conventional loan falls under Fannie Mae or Freddie Mac, FHA, the Federal Housing Administration, being very close and tied into a government agency with HUD and everything like that. A DSCR loan is a non-QM loan. So that is non-qualified mortgage that does not use an automated underwriting system. It is manually underwritten and falls under a different category because there is no personal income use from a borrower.
Is non-QM loan another term for DSCR loan? Or
not necessarily. So non-QM is an umbrella, if you will, and there are several different loan types that fall under it. I'm sure that other people, either through a Google search or people that have utilized these non-QM options, a lot of self-employed, somebody who has their own business, has a lot of non-QM options, something like a bank statement loan, where you're using the balances of your business bank statements to qualify for a loan in regards to the ability to pay for that loan, reserves, things like that. But the term non-QM basically refers to an umbrella of products that lay under it, DSCR being one of those options.
What types of properties or investment are DSCR loans most common?
Essentially anything that a home loan would be typically used for. Single family, 1 to 4 units, so a 2, 3, or 4 family. Anything that you could basically, qualify to get renters in, hold a lease agreement, either short-term or long-term rent, which we'll touch on later. Condos as well, warrantable and unwarrantable condos. So some of the most typical housing, if you will, can absolutely be considered for a DSCR loan.
The criteria that lenders look at when approving a DSCR?
Yeah, absolutely. So again, since a DSCR loan does not qualify a borrower's income, we are heavily looking upon, and this is where using a very trusted referral source for somebody like us in our business relationship, correct, is we need heavily rely upon rental comparisons in order to qualify that mortgage payment will be covered by rent and hopefully cash flow for that client. So rental income is a big thing. Down payment, reserves, things like that. A DSCR loan, since it is an investor solution, you can close in the name of an LLC. So we can use that LLC bank accounts in order with an individual's personal bank accounts to qualify reserves. So reserves being a big thing, down payment, again, those bank statements, either personal or business, being qualified for down payment. 20% down payment is just something typical that you will see to be considered for a DSCR option. And it allows for up to 4 borrowers. So, if you have a group of friends that, really want to get into real estate investing and want to, kind of measure up for their first investment, something like 20 or 25% down, you divvy that up between you and your 3 buddies who, all want to get into the same property and learn together. It's a great option there.
Yeah. Let's talk about benefits and challenges. What are some of the benefits of using DSCR loan for investment properties, and can you discuss any challenges or downsides associated?
Yeah, absolutely. So I think that some of the biggest benefits when it comes to an investment property, real estate transactions, things like that some people don't even really consider is the ability to have certain tax write-offs in regards to real estate and have it being, a depreciating asset, if you will, in the term of being able to write that off on your tax returns. That could be an entirely separate conversation that we could have at another time, because there's a lot of things that fall into that, and there's certain things that you can bring up with your accountant to be able to have that be a big time benefit for you. Some other things that majorly benefit an investor using a DSCR loan option, number one is cash flow. This is all about the ability for rental income to cover a mortgage payment, as well as have that market rent be significantly higher than your mortgage payment, and actually have that be passive income working for you every single month. That's definitely the biggest thing there. Some of the other benefits as well, as it being a non-occupied owner property type, because of the loan option, it cannot be your primary residence. This is strictly an investment loan. This is an investor who either through a first-time transaction or an LLC or with an ownership group of up to 4 borrowers are using rent to be able to have an appreciating asset. An appreciating asset there is also a big thing, as I'm sure everybody has seen in this market. Home prices aren't going down. They're only appreciating, they're only building. And to kind of quote Warren Buffett, if you will, it's not so much about timing the market as it is time in the market. So if you have the equity, you have the ability to get into a purchase now, regardless of where the interest rates are. And now we're kind of touching into some of the downsides of today's current market and, the dreaded interest rate. So being able to get into a property now and having it be an appreciating asset for you with equity build, being able to, if you have somebody who's a little bit more of an experienced investor, and this is something that I use as a tool to educate everybody that we come in contact with as our clients and other people as well, is the ability to refinance, pull out equity from that cash flowing property, have it still be cash flowing, and roll that into another property to create even more passive income for you. Huge asset there. And then again, going back to the dreaded interest rates. If you have the ability to get into a property now, which not everybody does, a lot of people have the question mark and, that dark cloud of interest rates looming over their head when they're looking to get into either a primary residence, a second home, an investment property, whatever the case may be. The market is the market, and we all have to deal with it as real estate professionals and as, buyers and borrowers alike. The interest rates are what they are, but if you have the ability to comfortably get into a real estate transaction right now, it's only going to be an appreciating asset for you. You're only going to have built equity. And where we're talking in terms of net worth, if you will, having that property be an appreciating asset only builds more money, more equity in your own self-worth. So is it for everybody right now? Absolutely not. And that's the first thing I ask people. If somebody's getting into the idea of, I'm looking to purchase my first home, or, I'm just getting engaged, or, we're having a baby soon, something like that. If it works out for you and your finances, then it is absolutely a great time, as it is at any time in any market. So that's just some of the biggest things that I like to educate people on. I know Mike do as well.
Yeah. How do fluctuating interest rates, in fact, impact DSCR loans, and what strategies can investors use to mitigate that risk?
I think that for any real estate transaction, especially this one as well, when you're talking about something that is an investor solution for people, due diligence and homework is the biggest thing. fluctuating interest rates are always going to happen, right? Well, this is unlike a market that we've seen in the past where interest rates are high and home prices are only getting higher. So that's kind of a very inverse relationship to typical markets, if you will. I think that right now being able to do the homework of what market comparisons are for rental income, what market comparisons are for investment properties alike in that area is only going to give you a clearer idea of how much cash flow you're going to be able to get every month, where market rents are going to go for that area for the coming years, everything like that. Are you going to be able to incrementally increase that rent and in turn create more cash flow for yourself year after year? And with fluctuating interest rates, so long as DSCR loan can be closed with an ARM loan type. An ARM loan is an adjustable rate mortgage. As so long as we are all doing our homework in regards to this purchase being done with a loan where you have a high interest rate and it's still cash flowing, that ability to refinance in 6 months or a year when the rates come down to a more typical market that we've been spoiled with, then you're only going to cash flow more, and you could pull out that equity if you want to. We could do a cash out refinance or a rate and term refinance. In both scenarios, you're looking to, one, change the term of your loan. So if you got into a purchase tomorrow and you finance 3 years from now, that new loan will not have a new 30-year mortgage. It would have a 27-year mortgage. So we're paying down that equity while also using an appreciated value for that home to get you into a new rate and term. Rate being that interest rate. Hopefully being lower than it would be today. Absolutely being lower than it is today. A cash out works along those same lines while being able to put money in your pocket. So that only changes your LTV in regards to your loan to value. So if you wanted to do a refinance, in a year from now, when rates fall to 5.5%, 6%, whatever the case may be, and also put $100,000 into your own pocket, we can absolutely make that do so long as the numbers work, that rental income works, it's still cash flowing property, things like that. And then you can roll that equity into bills, credit cards, paying off, a car payment, whatever the case may be, student loan forgiveness, just ended for everybody. And then also being able to possibly get you into a new purchase. Absolutely can roll that right into a rinse and repeat type scenario if you will.
Even though the interest rate is really high, I think you kind of made me feel a little bit more comfortable in still investing, because it sounded like if I can manage the payment now, so it's time the rates go down, then I can refinance and basically make even more money while I'm building equity now. So that's a really good plan. So
absolutely.
Let's talk about tips for investors. What are some of the tips for investors who are considering using DSCR loans for their real estate investment?
A lot of homework. That's the biggest thing I could stress to everybody involved. We do our homework to make sure that we're presenting the right product to our buyers, to our clients, just like you would do your homework on, hey, I think that this buyer, this client would like to go see this property. Can we make the loan type work for this? And then that comes big into doing the homework on rental comparisons in the market, in the neighborhood, home appreciation comparisons in that market, in that neighborhood, as well as past sale comps, being able to show that when you and we put an offer in for one of our clients, that we're going to be able to have that home appreciate and, be appraised at that offer rate, and then also have it be worthwhile for that client, making the dream of home ownership come true.
Can you recommend any tools or resources for calculating and analyzing DSCR loans?
Well, absolutely use us as a resource. Number one, we're in the market, we're real estate professionals. We see these things day in and day out. We're able to quite clearly, paint the picture to a first-time investor or, a multiple-time investor, if this is a good investment for that specific person. There's no cookie cutter mold when it comes to real estate investing or real estate purchasing as a whole. As for some specific tools, there are lots of websites that you can go to in order to qualify rental income in regard to a certain market. I know that there's some Airbnb rental calculators on websites and things like that, being able to show what somebody thinks or what a group of people, a lot of similar properties in that area get for rental income, and as well being able to help you calculate in your own minds how much there needs to be set aside for expenses, for that unforeseen, plumbing issue or whatever the case may be. And that's something that we take in consideration as well, especially when using short-term rental income. We either use, depending on the lease agreement there, if rental income on the lease agreement is higher than market comparison, we use that pass, and so long as that property and that lease agreement has been getting that higher rent for the past 3 months consecutively, that's the rent that we can use. In regards to something of more like an Airbnb type, we would use the past 12-month average of rental income, taking into consideration the high seasons, the low seasons, things like that, and then accounting in there a 20% expense ratio as well. So obviously not as favorable when qualifying that 12-month average, but taking into consideration too expenses, overhead expenses, things like that for our buyer, for our client.
What trends do you foresee in the DSCR loan market in the future?
I think that's only going to get more popular, to be quite honest with you. I think that we kind of touched on this before, the amount of Instagram or TikTok or, just content that is out there as a whole on the internet for real estate investing and be able to build wealth off of real estate investing, I think is only going to get more popular. I think that this is a great tool to be able to very clear cut and concisely make it a reality for somebody who may be just getting started, or somebody who doesn't want this to show up on their credit report, when they're going to purchase, a single family home that is going to be owner occupied for them. That there's lots of advantages to it, and I think it's only going to be getting more popular as more and more information comes out about it. And I hope that, we're a good piece of that puzzle.
Where can our audience or if our friends could go and learn more about DSCR loan, or to get in touch with you in the future?
Yeah, I'm on Instagram as well at loans.frank, and please feel free to direct message me on there. My contact info is on there as well, phone number, email, everything like that. We can also schedule a consultation for free for you, just to be able to kind of touch base and see if this is a great loan option for you. So it's definitely some places that I could be reached at, and as well do your homework online. My company as well has a lot of resources for prospective people who might be wanting to dip their toes into real estate investing or home buying overall. So there's a lot of resources out there for us to get in touch with.